Good morning, everybody. Made it through the worst of the storm. Yay. Back to normal again. We don't have the Spot Gamma AM edition yet, but we do have the PM edition, and they shared a top stocks OpEx spreadsheet, but I thought it would be maybe like the OIC monthly high volume names. It's like 587 names. So if you know anything about weekly options, there's like 615 companies that have weekly options. So if it's got 580, then it's pretty much just a watch list of weekly option names. But whatever, it does come with the call walls and put walls and GEX levels and all that. So I went ahead and I shared that. You'll find it in the chat. It's worth taking a look at, I guess. I know my screen's not showing yet. I'm still doing the YouTube connection. It takes a moment. All right, you should see my screen. Everything's good. Orale. Buenos dias, everybody. Sell-offs are happening around the world. Seems to be fueled by fears of harsher tariffs and a crackdown on China with repair. There's always these little loopholes on different ways that they can access chips, and they had their fingers into some advanced colleges where they were getting chips that route, and then through chip repair, and along that avenue they've had access to chips. And the United States continues to find ways to crack down on limiting China's access to chips. That hit the semis, which hit everything else, and now here we are. They did have some nice write-ups on last night's founder's note, if you haven't read it yet. Johnson & Johnson had earnings this morning, by the way, which they did really good on their earnings, but they dropped anyways because of their forward outlook. They bought a couple of companies. They bought something, and that cost is going to weigh on their yearly guidance, and the market didn't like that, so down it went. Punish a good company for making money, right? Whatever. Japan's down a lot, more intervention, which is funny. They continue to stress for days, we didn't intervene. And then it comes out that they did, and they're like, oh, well, okay, yeah, well, maybe we did, but we couldn't tell you at the time. Last night, one of the comments was, we're going to respond. Like, what do you expect us to do? So a lot of intervention coming out of that space. They coordinated it really well with CPI. That was a nice move, but that wasn't the only one. And so a lot of reverberations coming out of that. Nice article, by the way. You know who you are, who shared that with me on IWM and how far it moved, right? Like 4 standard deviations above its 50 or something like that. I haven't got to read the whole article yet, but I appreciate the send. Big moves, and I don't think we're done yet. NASDAQ down more than 1.5%, S&P at 1%, small caps at 0.75%, all to the downside. The Dow Jones, which did really good yesterday with United Health, Caterpillar, and others, It's only down less than 0.5%. Europe, Hong Kong. So we got Barkin today at 9, industrial production. We got Waller, the beige book. And it's Wednesday, so we got crude oil inventories that are going to come out. The 20-year bond, my baby, got that auction today at 1 o'clock. Pay particular attention to these auctions. They matter. Import exports out of Japan tonight might cause a little bit of volatility by tomorrow if we get some odd numbers, but really the big stuff will have already happened. It's also VIX OPEX today, and then market OPEX on Friday. OPEX is options expiration. It's the third Friday of the month. So a quiet start to the day, and then we'll kick everything off with crude, 10:30. The auctions, even though it's only listing the 20-year here at 1 o'clock, just keep your eye on 11 and 11:30, especially 11:30 today because of Europe, right? If Europe was the cause of a move and then Europe closes, a lot of times will mean revert after the weight of that move has been lifted. So it's worth keeping an eye on the clock today. There was also a Fed speaker in the overnight hours that was chipping teeth. He didn't really say anything new, but it's worth noting. I don't see it here, so I'm not scrolling back far enough. But when I was checking it earlier, scrolling back a lot farther, there was comments by a Fed speaker that really wasn't saying anything new, just singing from the hymn book, so to speak. I had noticed last night Bitcoin making some exaggerated level above that 65. So we had that even last night. It goes to the heart of speculative flows. Seen some pretty good moves. It just needs to keep it. ASML likely going to get hit. Tokyo Electron, it doesn't really spring to mind as a name that I'm familiar with, but I certainly know ASML. So as you can see, the ES has broke through the weekly pivot point. We don't go underneath that weekly pivot very much. When we do, we don't generally stay there very long. We can see, for an example, we were below it down here, and that was a Tuesday print. So by Tuesday afternoon, we were back above it, and we ran it for the rest of the week to the upside. It's possible we could spend the week down here. It is bearish below, bullish above. But right now, we're still just negotiating with that pivot point. When we're crossing back and forth, I don't really put a lot of weight on bearish and bullishness at that point, other than it was bearish to get here. Pretty obvious, right? We had to fall to reach that point. The central pivot for today is above the previous day's central pivot. It's a really wide pivot, which implies really we weren't supposed to expand and that breakouts would likely fail. It doesn't seem like it looking at what we got in price, but these pivot ranges don't make price do something, right? They just give us insight on what we think price should do. And going back historically, when we have wide central pivots, price generally fails to break out, right? It'll try and fail, and we get those fake breakouts like back here. It tried to break out and it failed, and it never reached the top to break out there. What I have found, though, in the past is if we get a very narrow central pivot, which implies that breakouts could hold and that breakouts continue to expand farther and farther. If we get a day that has that and it stayed sideways anyways, we can get the move the next day. I'm not saying that's what happened here because the next day's pivot channel wasn't all that big either. And it was just 2 days of sideways. You get enough sideways days, the market's going to make a move no matter what that central pivot range says. They keep harping on this statistic about a 2% down move and how the S&P hasn't had one in, I don't know how many days. It's been a while. We're close to breaking a new record on how many days we've gone without a 2% down move. At some point, we're going to break that record. Got to remember, even though this is a uncommon phrase, half the day is already done. I know, I get it. You just crawled your happy butt out of bed, but there's a 23-hour trading cycle and we're on the downhill side of it, right? The market opened last night at 6 o'clock and here it is at 7:40. So if we're going to make a 2% move, we've got less than half a day to get it done. That would make the move an exaggeratedly quick move. Sure, we've made a lot of it already. Half, if we're looking for a 2% move, we're already down 1%. These are the voodoo lines, but those are for stocks. Let's just get those out of the way. I set this grid up for stock evaluation, not necessarily for futures. All right, the white line is the snow line is kind of important. It's a bit of a big one, but the main really big one is this green one down here, and we're a long ways from that, 52.50 basically. So you can see how the white line, this snow line, acted as a resistance until we finally got through it. Then it provided itself as a support level. We went to the next one, same thing, fought against it. We really weren't able to keep it. We're back to that level. We've just been chopping about there. We expanded away from it once and we were able to come back to it. But I think if we break this 56.20 again, we're very likely going to go back down to 55.20, which is the previous white line. These voodoo lines are weird. They've got Elliott wave in it and all sorts of other stuff, and they're handcrafted. They're not calculated on Thinkorswim. We have to go out and get them and get updated levels. It's a proprietary one. I can't share it with you. You have to go to Simpler Trading to get it. Otherwise, I would share it. But it's hard to trust something that is a proprietary tool and they don't tell you all the parts and pieces and they draw the lines. So I look at them, you know, I've been looking at them for a couple of years. I've got some respect for those lines, but you can only take it so far when you don't know where the lines came from. Still a long ways from the 10-week and the 20-week. These are nice, smooth lines pointed sharply to the right and to the upside. They look great. There's nothing wrong with this market. Even the pullback that we're getting right now, take a look at the weekly candle. There's nothing wrong here. All right. Now, if you want to have a bit of a line in the sand, 56.60 is the halfway point of last week's candle. And even if we break that, as long as we're staying within last week's range, then as negative as this feels, it's just a down day. And we kind of need a down day after these moves that we've had. We've had some really good moves, some really good weeks. So a little digestion, you know, it makes sense. It needs to happen for whatever narrative they attach to it. Semiconductor, tariffs, whatever. They'll put something to it and say, oh, it's this. Yeah, okay. Monthly still looks really good. If we were to evaluate the measured move on the breakout of this last pullback, we've already hit and went past 50%. $61.14 would be the next level up if 54, call it 54.50 breaks, then we don't have to worry about it. But as long as that 54.50 holds, then 61.14 is on the table. But this is a monthly level. So, baby steps. These are anchored VWAPs. I don't show them enough. Thinkorswim actually built them into their platform finally after we ran custom ones for years. These are much more user-friendly for people. You don't need to know anything about coding because it gives you the calendar, so you don't have to punch in the date just right. If you've never messed around with those, it wasn't fun. This is really simple, so you can anchor these by the month. So I've got, January for the start of the year, and then May, June, and July are showing here. That's the monthly anchored VWAP. And we're coming down into that anchored VWAP. 56.32 is a cog line. It's also July's anchor. See if that has any weight to it. We're below the 3-day. Generally speaking, that's going to put us into a negative context, but we're below yesterday's level, so we knew that anyways. Coming into the 10-day, 56.50. Worth keeping an eye on. See if we flip off of that level. And with the VIX expiring today, the vol levels are going to be a little weird anyways. I wouldn't struggle on it. And we're back inside the acceleration channels. There was a discussion a little while back about a new earnings quarter. And how a new quarter can mess with the markets. So here's a couple of quarters from 2022, 2023, and 2024. I didn't go too far back, but it's interesting to note how significant changes to the market happen after a quarter, right? Maybe it's coincidence. If you just draw enough lines, price will respond there. You can convince yourself of anything. But it seems like a lot of times the entire narrative changes in the market, and it goes to the heart of a new quarter, a new cycle, a new narrative that comes in. We are starting a new one, and we started it pretty aggressive, nice moves to the upside, but that doesn't mean anything. We started this last one really negative, and that was our 5.5% pullback, and we started this one a little negative and then had this massive move to the upside. So, just because we're starting out a little positive or a little negative, it doesn't mean anything in the bigger picture. Go back and take a look at how some of these have been affected, and keep in mind that these are not in isolation, right? If we randomly go back to Q1 of 2024, can't just go to that, right? That's not Q1 of 2024. That's a mislabel. But that's Q1 of 2023, it looks like. Yep, 2023. So we'd want to think about the political climate. Were they still raising rates? What were the banks saying back there? Because these levels aren't in isolation. Yeah, change some of the labels on it. It's in a little bit of a hurry when I coded that up. Hey, the AM edition finally came out. Woohoo. They were late with it. Not yesterday, the day before. Yesterday, I couldn't access anything. So I will get that shared out. See if they have anything to say on the levels, right? We have a lot of volume this morning. We've been running in the 50s and low 60s, and today we've got 147. That's a significant number. It's been a while since we've seen a 100 print, let alone something like 150. Got the line in the sand there. It's an obvious exaggeration of where we have been. If you look at where we were when the market opened at 9:30, sitting at around 136 yesterday, 120 the day before, 160, we're pretty elevated this morning, and we're not even at the open yet. There's no market maker move. They're not hedging, or if they're hedging, they haven't hedged enough to trigger the market maker move yet. Sorry, I can't chew bubble gum and walk. I gotta share this document. All right, you should see it in the chat. The sell-off has been clean and orderly. It's very organized. You couldn't ask for something any better than this. Nice leg down, and then a nice consolidation, another leg down, consolidation, and another leg down. We're getting a bit of a reversal. This is the yellow line from the ADR. Generally speaking, that's about as far as a market should go on a day-to-day basis, and we're already there. A lot of times we're barely getting to the red line. Forget the yellow one, right? So a lot of times we'd be looking at this level and we'd say, well, if it gets to the red line early enough in the day, we could actually go to the other side by the end of the day. But we're not talking about the red line here. We're talking about the yellow line. That's a lot deeper. The saying still holds true, however, that since we got to one side so early, we could go to the other side. But I'm going to put some asterisks on that. There's a lot of things overhead now that are going to act as a significant resistance. One is that yellow line. Just the fact that it's there is going to be hard to get through. And even if we do, we've got 5692 or 5691 cog line. We've got our own VWAP that we've got to get through, and it traveled with us sharply. You know, normally we'd have outrun it. It'd be like way up here at the round number, but it's holding with us pretty strong. That's going to be a hard level to get through as well. The ADR, yesterday's regular trading hours low, those are all levels that are going to be a problem, and yesterday's low. So two different lows, right, that we have to fight with, plus Monday's level. Now that we're below that, it'd be another significant resistance that we're going to have to work through. So I'm not saying we can't go back up. And as fast and as far as we moved, we're very likely to go back up at least to VWAP. Whether or not we keep it is something entirely different. A lot of this is going to be perceived as a liquidity gap that we moved really fast and we left behind some gaps in liquidity that could be filled. Line those up with things like the European Open, the Asian close, data out of Europe, and the kill zone move. And it's likely that we could just stay down at this level for the rest of the day, chopping. We do have some serious levels underneath. Volatility trigger, 0 gamma. Sure, there's a footwall down there, unless we're already underneath it. There it is, 53.50. Well, they really gave us some room to the downside. 53.50 is the put wall. So we're not going to get any help out of that. Look at 53.30, which is the cog line, and it's the 20-period moving average on the weekly. That's where the put wall is. How far is that? 6.25. Imagine that, a 6% sell-off, just like this 6% sell-off back here. Yeah, that fits. We got QRA at the end of the month. So keep that in mind. Quarterly rebalancing. Yellen's going to come out chipping teeth and trying to sell us junk. $10-day, 30-minute volume profile. We had discussed how it was very likely that the point of control was going to come up to us, and that would be considered bearish at that point because we would likely be underneath it, and then it would trap us like a resistance. But now that we're selling off, we've got this 56.60 level line in the sand that at the moment is holding like a champ. Pretty impressive. If that fails, we'll come back to this point of control and we'll add more liquidity to it. Think about it from this point. It wasn't going to fade anytime soon because it started here. We would need to go an entire week from yesterday all the way to Tuesday, all of that, right? 1 week of data would have to leave before we started losing any of this volume. But now if we come back down into it again and we strengthen it even more, this point of control is going to be a significant level for weeks to come. Weeks. Get used to it at 56.40, wherever it is. Looks like it's going to be there for a while. 56.32 cog line. It's a major level. If we get underneath that, the put wall looks a lot more inviting. Plus, zero gamma and the volatility trigger are really close to us at the moment. No VPOC from yesterday. If we were to mark it, we already took it out, and it didn't even look like it slowed down like a speed bump. It just ran right through it. It wasn't even there. We did get a significant level of volume before yesterday's low, like they tried to save it a little bit. It didn't help. That's likely where they tried to buy it on the bounce and run it back up, but that failed miserably. It wasn't where the greatest amount of trading took place. We can see on the TPO, it was way up here from last night. But there's no VPOC levels until 55.70. Long ways to go. Basically another 100 points from where we're at now. We're at 56.60. It's close enough. It probably wouldn't hurt to add this level on here. It's not a VPOC anymore. It would just be a POC. That'll kind of get our attention for that lowercase b profile. All of this, we could see a reaction out of the market at that level. It's certainly worth keeping an eye on. I wouldn't want to run into it blindly. And that's if we can get through 56.50. They took a front run on that and seemed to try to turn it around there. They're trying. So we didn't hit the edge of the weekly expected move. We got close on Monday and we really didn't do any better Tuesday. And then now here we are. We're already through Friday's close, so we're on the downside of that. It does put 5,600 on the table. You know, some cheap butterflies on the SPX at that level on the downside down here wouldn't necessarily be out of line. That'd be 55, 53, which is kind of nice. If you're going to do a spread, you want the break even to be on that line. So you could do like a 55, 50, 55, 55 put spread, right? The 50 and the 55. Or you could just do a butterfly and pin it right there. It would probably be pretty cheap. Just remember that SPX is going to open underneath 56.15, right? We're going to open down here after that. That's a big move. So at the open, the options are going to be pretty wild. We have VIX expiration today too. That messes with everything. So try not to open it in the first 10 minutes or so. Let things kind of settle out, VRO and all of that. Should be able to pick up a Friday expiration butterfly for about 5 cents. I mean, you can't get coffee for $5. So, you know, if you have a chance to make $450 by risking $5, sounds pretty good to me. Of course, your probabilities are really low, right? It's a butterfly. They have a low probability win rate. We're still more than 3.5% above the 10-week. So we're still in that sweet spot. We're higher than we would want it to be. Let's get back to the ES. 3% above the 10-week. 4 is the line in the sand that we really don't want to get above. That gets us into overbought territory. But if we stay under 4% and we stay above, say, 1.5%, then we're kind of in that sweet spot. And we're there. We're 3%. That's great. We needed a very sharp sell-off, or we needed a couple of weeks to grind sideways because we needed a correction, right? One or the other, a correction in time or a correction in price. It seems like they want to rush things. So we're getting the correction in price. So let's just get it done and get it over with. The clock is ticking. So they got to get it done. Let's see where we're at on the 10-day. Oh yeah, almost back to zero. So we're 0.25% above the 10-day. It's fine. We're on the decline. Nothing wrong with this. A nice fade back in between cycles. Makes perfect sense. We get a move and then, you know, digest it, a move, digest, a move and digest. You kind of get the idea. This was due. It's needed, right? The interesting thing is, and I don't do it, but if you were to put on sine wave and things like that, it lines up. I don't lean in that direction, but keep saying the market's like a living thing. It's one of the reasons that Fibonacci works so well. Fibonacci's found in nature. Yeah. Financials, big moves. Industrials, I could have swore that one was setting records yesterday. Building materials, also really big moves. Healthcare, thanks UNH. Consumer discretionary. How this looks in 24 hours, if we were to come in and look at this, you know, again tomorrow, it's gonna look quite a bit different. But when I come here, I'm not necessarily just looking at what the candles are doing. Every one of these charts has this white line in it. That's a LINREG line, linear regression line. And at a glance, I just want to see which direction is that line pointing to the downside, to the upside. How steep is the line? Is it like XLU here, where it's almost a perfect corner to corner move higher, or is it more flat? Then are we above or below that line? The orange line is the 50. The purple line is the 200 period moving averages. And is the 50 above the 200, and is price above the 50? So these are just things that I look at when I come to this. And then, of course, we got the labels. How's price moved over the last 5 days? This doesn't tell us what's happening this morning. It just gives us an idea of what has been happening over the last week. And as much as they say that the entire market was just being lifted by the Mag 7, all of these are above their 200 period moving average. Some of them are fighting that 50, maybe above and below on utilities. It could be arguable. Energy just made it back, but for the most part, they're all above their 50 too. The 50 is above the 200. Those are very healthy things. If we were to, like a doctor going through a checklist on your health, those are healthy signals. It takes time for price to get above a 50 and a 200 and to keep it, and for the 50 to be above the 200. Trying to stress the fact that, sure, it's a little red today, but I wouldn't freak out and like run out and try to sell a bunch of stuff. We could be in the start of a new 5 to 7% pullback. We could, but we don't know that yet. The nice thing is, if we are, price in some puts that are 5 to 7% back for September, and you'll see that they're not very expensive. Just buy them. Like, so what? If it loses, you don't have to write it to zero. Buy a $70 call or a $70 put. And if we start to rally, then sell the put for a small loss and move on. You're fine, no problem. Semiconductors, the triple leveraged is down the most, more than 9%. It's down almost 5% over the last 5 days. The FANGs are down 10% over the last 5 days and 5% this morning. Semiconductors looking at SMH, 3.5% this morning. Another Mag 7 or Mag 8 or Mag 10 down 1 3/4. Our own little homemade ETF of the Mag 7 down 1.5%. Mega cap growth, which is not one that we see moving around often in the pre-market, down 1.5%. Banks, after banks being up 14% in 5 days, the fact that they're only down 1.25 is impressive. Just mean reversion alone, I would have expected them to fall farther than that. The fact that they're not, that's nice. They may hold up well. Biotech down 1.25. Cloud computing, some of these that were up, like banks that were up 14%. We're due for a pullback, right? We needed this. Communications, solar, Bitcoin, everything, right? It'd be easier probably just to say, what's up? What's up? Nothing. The VIX is up, but nothing. Well, that was easy. Uranium is up. Focus maybe a little bit on CCJ again. My old friend just keeps coming back around. Could see some flows out of this maybe. That's not the only one, right? There's like URN, URNM, a lot of uranium ways to go. But we do have uranium up. Solar, which is odd because the China ADRs are down and China's down. this morning, but solar's up. Not really though, right? It's just an algo print. We're not really seeing any good flow there. Crude is up, and industrials. I mean, look at that move in industrials. That is fantastic, man. And that blue line, that's the year-to-date anchor to VWAP. Yeah, it's cool, right? That just draw a line and maybe price will hit it and we can convince ourselves that it matters. Grimes, right? Well, maybe it's just a coincidence that price stopped falling there. Sure, I mean, there was a pivot back here. I'm sure it was that. But we are broke out now on the year. Really nice moves on industrials. And I don't think it's done yet, but it is certainly extended. Probably needs to digest some of this move. That's a really big TRB setup too. And then crude is not quite there, but it's close. And we're going to get crude data today at 10:30. So worth taking a look at that at the very least. Gold made some really good moves yesterday too. I didn't get to play them, but I saw it. Intel is up in the pre-market this morning. This gap is closed, so there's no focus there. It would be nice to get a candle close above that gap though. So I would still put it on your radar. The gap is 35.11. Let's get a close above that. And we're at 34.92. So that shouldn't be too big of an issue. It's a really quick reversal. What kind of news do we have here? No, no news on it yet, but that didn't happen from nothing, right? None of these others got the memo. JP Morgan still looks really good, barely down at all. So really a lot of these aren't in too bad a shape. Google down a quarter, or excuse me, a half. Netflix a half. Some of these ones that were really high flyers like Apple. Apple's made some big moves since its last earnings when it was at 173 and then it went past 133. So, you know, a 60-point move. It's got to digest a little bit. And it looks like Micron wasn't able to keep that structure. Now we've got, it's an ugly head and shoulders, but it is a head and shoulders. The neckline is broke. We're already on the move. Try to measure it. This is what we would measure just to highlight it, to make it easier for you guys to see it. A measured move takes us to 112 on MU. It's a really ugly head and shoulders. But the neckline broke. It actually broke yesterday, closed at the lows, and now we're gapped down another $5 this morning, 4%. We're coming into this distal line the proximal line, we're already underneath that. If this weakness continues, semis and the Mag 7 have the most to offer shorts, right? They were up the most. I know it's comfortable for newer traders to short things that are in the hole, but shorting things that are high up have more to offer, right? Because they have more to fall. Plus, if you're wrong, they're still close to their highs, and you'll know that you're wrong because it'll break into new highs and you just take a small loss and move on. Remember, it's not about winning and losing. It's about small losses and maximizing our wins. So what I got for you guys this morning, we got a nice move going. Everything's starting to look really good. When it comes to how far we've fallen, we're already at the ADR full. So we certainly could fall more, but that's the 10-day moving average. There's zero gamma and a volatility trigger. Those two combined will act a bit like a support level. And we got the 3-week moving average. So we got a lot underneath this to help us out. Shouldn't get too extreme. And if things do, then the easiest way to figure out how far we could fall from here, just measure between the red and the yellow box and take that box, set it lower. That's the next move lower. You want a full one, then do a full move, say from red line to red line. And there's your two extremes, right? 56.39, which is the 3-week moving average. That'll be like double support right there. And then the voodoo line, 56.19, which lines up with a full measured move. And if we look left, I'm sure there's some structure over there, like a weekly. Yeah, it's a weekly high too. All right, everybody be careful, be safe. Remember, you got auctions at 1 o'clock. That's a big one. It's my baby. And I'll see y'all next tomorrow. Yeah. What's up? Oh, I didn't realize there was a comment. What's up? What's up? Of course. Y'all have a good one.